Max, thanks for coming on. Great to have you in the programme, as always. These are worrying findings for many across the world, US, UK, here in Russia as well. What do you think the main driver is behind this rampant inflation?
Well, look, printing money has real consequences. You know, Jerome Powell is the Alec Baldwin of central bankers. He thought he was shooting blanks all these years, but that's real base money bullets. And now people are getting hurt by it. When you print trillions and trillions of dollars, it ends up increasing prices. The effects of the money printing were mitigated by two primary causes. One, America was outsourcing its factories and labor to China. That's no longer the case so much anymore. Secondarily, the money was being purchased by the central bank in the form of quantitative easing and the buyback of securities and debt from Wall Street, and that's no longer working either. So now the money printing is just going directly into the CPI. It's going directly into price increases. And once the inflation genie is out of the bottle, there's no way to put it back in. Expectations are running high. So this is the beginning of a secular inflationary move.
So what does that mean for people on the ground? I mean, we heard there about the increase in prices for quite specific commodities, certain food items, cars, etc., particular thing here in Russia. What else do people have to worry about with these figures coming through?
The purchasing power of this fiat money is going to decrease. So everything will cost more if you're using fiat money. This is an experiment that goes back to 1971 when the world went on a fiat money standard. And now for 40 years, we've been living in this experiment. And now in 2021, the experiment is blowing up in our faces. Purchasing power for fiat money is going down. That means that prices for stuff are going to go up. The only way to stop it is to raise interest rates. Now in Russia, they're actually raising interest rates. They're doing the right thing. But in the United States and Great Britain, they're not raising interest rates. As a matter of fact, they believe that the way to fight this would be to lower rates and to make more money available. So they're actually throwing gasoline onto the fire. If they were to raise rates even a quarter of a percentage points, it would throw the entire leveraged economy of the UK and Britain into complete paralyzation, because those two economies in particular are leveraged incredibly by all that borrowed money that's based on this years of cheap interest rates. So they've really put themselves in an untenable position. And I think we're going to see a huge economic dislocation. This is the beginning of a secular inflationary move that's going to cause tremendous damage.
This is a phenomenon that multiple countries across the world are seeing. But talking specifically about the US right now, you mentioned obviously Russia raising their rates, the US, the UK keeping them low or even considering cutting them. How is the US approach to dealing with this phenomenon any different to other Western countries?
The U.S. is similar to these other countries in that they're all coordinating their central bank policies, and they were all living in this dream world where you can print money forever and have no consequences, even though we know that the results of that were the massive wealth and income gap, the rise of an American oligarchy, the reinforcement of the existing British oligarchy. Because Russia is not an indebted economy, the debt to GDP in Russia is one of the world's lowest. So Elvira, over there at the Russian central bank, had room to raise rates. So the Russian economy is managed. She's probably the best central banker in the world. But these other countries, because they're so incredibly indebted, they put themselves in this position where any rate raise will kill the economy. And the COVID crisis and the supply chain disruption simply revealed the fact that there's incredible fragility in these economies. And now there's no policy to address it other than to allow for a massive default to happen on not only corporate debt in America, but the American sovereign debt. I think the U.S. Treasury bond is probably has to undergo a massive downgrade by Moody's and S&P. It's not a AAA credit, it's a CCC credit. That's a junk credit. America's bond rating should be junk. Same thing with the United Kingdom. That's a junk-rated sovereign debt piece of paper. That's not worth anything. That's why you see negative interest rates, because it's so difficult to sell these things that the actual bank prints and buys back their own paper at a massive loss. That's called debt monetization. This is what we've always explained, how these other countries in the so-called banana republics have run into trouble by buying back their own debt. Well, now America is doing the exact same thing, and the United Kingdom is doing the exact same thing. These economies are in dire circumstances right now.
You mentioned the national debt there, the ratio to national debt. Of course, the deadline to increase that debt ceiling in the US is looming. Do you think these inflation rates will have any impact on that?
There is no debt ceiling in America. It's the debt will be increased until the bond market collapses and we have to declare insolvency here in the United States. Look, in 1971, America defaulted on its obligation to Great Britain by closing the gold window. So America defaulted on its sovereign debt in 1971. I expect America to default again on its sovereign debt, and I think the Great Britain is going to require another IMF bailout, just like they did in the 1970s. After Brexit, the UK economy is such a shambolic mess right now that they're going to need a major IMF bailout. There's just horrible situation, economically speaking.
So you mentioned one way to deal with this is obviously raising interest rates to tackle inflation, an obvious move. But what is the answer to this problem then? What can the US Treasury and the Fed do right now to deal with this looming crisis?
Well, yeah, raising rates is what Paul Volcker did in 1980. When the debt to GDP ratio that was a possibility, and it worked after a massive debt raising of interest rates into the 19%, right? But the debt to GDP ratio right now is 10 times at least higher. So that's actually not going to work. There is no solution. That's why people are running into Bitcoin. That's why Bitcoin's worth over $1 trillion now, why it's going to $10 trillion now, is that people are running for the hills. They're getting out of Dodge. They're dumping their U.S. Treasury bonds. They're dumping whatever they can, and they're putting it into Bitcoin. And so Bitcoin, we're going to see Bitcoin be the major winner in this sovereign debt collapse globally. That's how you get to $200,000, $300,000, $400,000 per Bitcoin. Everybody knows it now. Paul Tudor Jones, Stan Druckenmiller, Michael Saylor over at MicroStrategy, they're all openly talking about a speculative attack against the central banks. Borrow at that cheap rate, buy Bitcoin, and let them die. That's what's going on.
And Janet Yellen, for one, expects these inflation levels, rather, to persist until mid-2022. Do you think that's an accurate forecast, or could we see these problems persist into the years after that?
You know, last year, Janet Yellen said the biggest problem was deflation. Then they said, oh, you know what? It's actually inflation. Then they said the inflation was transitory. Now they're saying the inflation is going to be around for a few years. We're at the beginning of a multi-year secular inflation that will last quite a bit of time. We're leaving a 40-year bull market in bonds. It started when Volcker finished his job back in 1980, and Ronald Reagan and Margaret Thatcher came to office, and we've had 40 years of lower interest rates. Well, that's now finished. We're going to have now a multi-year period of rising interest rates. It's going to be worse than the 1970s. We're going to see major defaults across the corporate world. We're going to see sovereign defaults, and we're going to see more countries like El Salvador start to make Bitcoin legal tender to get out, and they're openly mocking the IMF. El Salvador is openly mocking the IMF on Twitter, saying, we're buying Bitcoin, ha. And we're in a completely new era, a new world, a new global standard, as Rand Paul, a senator in America, has called on Bitcoin to be the new global monetary standard. Not the dollar, not gold, Bitcoin.
All right, that was Max Kaiser, host of the Kaiser Report. Max, thanks for your take on that. Good to have you with us.
Sure.